Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday and TGIF. Hope you guys have a wonderful upcoming weekend here. And it's June 1st, so starting the new month here. Now, we'll start off with the economic news releases scheduled for today. We do got quite a bit. We'll start off with the non-farm payrolls for the May because that's what everybody's looking at. We had 77,000 for April, jobs that were created. We thought it would jump up to about 165,000 for May, and it came in very disappointing at 69,000. So, very disappointing that it actually dropped instead of going up. Unemployment rate for May, we had 8.1. We figured it remained the same, and even the unemployment went up, so 8.2. So far, so not looking too good for the economic news releases. We got personal income for April. We had 0.4%. We figured drop down to about 0.323% and actually dropped down to 0.2%. So people start earning a little less money in April. And consumer spending, 0.2% for March, and we figured go up a little bit, 0.3, and it did. So people start earning a little less money and started spending more money. So I guess that basically means savings will be kind of decreasing there. Core PC, that's the Fed's favorite gauge for inflation. So this is a very important. This is called the personal consumer expenditure. We have 0.2% back in March, and we figured it would remain the same, and it dropped down to 0.1%. So basically what that means is inflation's very tame. We're not having an issue with inflation as of right now. And then ISM, that's the manufacturing, and this is for the month of May. So for April, we had 54.8. We figured it'd come down a little bit, and it dropped down a bit more, 53.5. So we're showing some issues with the manufacturing dropping further. And also another note, which I didn't have room on here, is which is a little bit brighter actually. Construction spending was up for the month, so there's at least an increase in construction spending. So the negative, obviously, payrolls, unemployment rates, personal income, uh, and manufacturing numbers are down. Positive, we got spending is up, so that means people are spending. Hopefully, it'll create a little bit more jobs, and inflation's in check. So we'll jump over now to the headline news. The stock market's down. It's way down actually, and we're looking after being in the 13,000 range for the Dow. We're actually looking at it's already down to about 12,100. So we could see it possibly drop below 12,000 at some point, maybe even over the summertime. It could be something to watch as well. Uh, Another thing that's affecting the market with our own domestic economic news release is scheduled for today. Manufacturing is slowing in China and Europe, so that's also a factor because now we're looking at not just only our microeconomy here in the U.S., but we're also looking at globally, and it's not looking too good right now. So another night, I didn't put it in here, but something to note. I don't know if you guys noticed that price of barrel for oil has dropped quite a bit. We're down to about 83 bucks a barrel now, which is hopefully we'll start seeing that maybe at the gas, at the gas stations here. So especially with summer here, and I'm sure people like to be able to do a little bit of traveling while the kids are out of school. So we're going to jump over to the bond market, see what interest rates are doing today. And because of all that, we actually jumped up 30 basis points, even though you may see a little bit of red down, but because it's at a higher point, now at the 105.28, because we're down about 3 basis points. We started off at 105.30. It's amazing. It's as soon as you think you're going to be at the height or maybe see the rates at the best, we keep setting new standards. So how high this is going to go, we don't know. What this means is when the bond market goes up the chart there, that means interest rates are coming down lower. So interest rates are showing more and more improvement as we see. So these bad economic news releases helps out the bond market, which also helps out interest rates. So I guess you could basically say for every negative you want to see, there's also positive lighting. So, but to kind of show you what this means, is I did this chart here, And this is kind of like the maximum I could show on this here. But last couple of years, like the last year or two, we've had really actually our best pricing compared to even early 2000, and that's even that we probably hadn't even seen that probably since the 1970s. And at this point, I don't even know if we even saw at this point where we're at right now. But if you see the bond market, how high we are compared to where we've been through over the last year and a half, we've been, we're at remarkably higher levels right now. And basically, that kind of shows you how low rates have come. And we probably haven't seen this probably since before the 1950s even. So where we usually average between 3 and 6% before the around 1960s, and then we started having issues with inflation in the 70s, and which led into the 80s, which we saw double-digit growth interest rates. Um, so hopefully we don't have that same type of issue, but that is something that could be on the horizon. And with all that speak, what we were talking about, now that you're going to start hearing more about quantitative easing, the Fed probably stepping in and coming in with quantitative easing with some more. Even though we start off the year with the negative, some positive economic numbers, now it looks like we're seeing some setbacks coming backwards. So you may see the Fed step in and start implementing some quantitative easing here in the next month or so. So that keep your eyes open for that, and the investors will be watching for that. Sorry for the long program today, but a lot of news today and want to share with you guys. You guys have a wonderful weekend, and please be sure to stop by Mike'sDailyMarketReport.com and subscribe. Get your news sent to you every morning. Have a great day.